Hello everybody, my name is Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is November 2nd, 2021, and this is the second time I'm coming to you because this is the live stream day. I hope you're having a great day. I hope you had a great day wherever you are. And I hope you're well. I hope you're healthy. I hope you're happy. And I hope that we have a good stream. We get into some good ideas, some good knowledge sharing, and we learn something. So with that, let's get started. In today's live stream, I would like to talk about what we are about to see in the price of Bitcoin. Today is momentous. Very, very, very important day. Every day is an important day, but this is especially important in the Bitcoin price. Why? Because many people, a large majority of people, are firmly convinced that Bitcoin is going to make all-time highs imminently, okay? That because we're over 63K, we're at 63K, we're in that region, right? They're looking at price, not price action. Big mistake. Price is one thing, but in any kind of market, price is important, but not as much as price action. Not as much as market structure. Very, very, very important, okay? So they say, well, 63 is close to 67, right? That's just a few percentage points away. Ergo, hey Google, turn it down. Hey Google, turn it down. What are you doing? I can't even hear myself think. So, I love my classical music, by the way. Anyway, ergo, because 63 is close to 67, we're going to go to all-time highs. This is not how things work, and you all know this. If you're subscribed to this channel, you know exactly what I'm talking about, right? You understand market movements, you understand market patterns, and this is exactly what we should be looking at instead, okay? Price is important, but price action's more important, okay? So, question is, because we're close, are we going to make that all-time high? Or are we going to be rejected and go back down and continue our downtrend? Because we've been in a downtrend. Let's be clear, we've been in a downtrend. So we're going to look at that. We're going to try to answer that question. All right, let's get into it. Right now, first of all, let's check the stream. Let's make sure that we're streaming properly. It'd be a travesty if we weren't. All right, let's go. Okay, let's see. All right. Talk amongst yourselves. Let's see. Okay, yep, we're good. All right. Anyway, so yeah, let's look into that. And you all know, if you're new here, you understand, or let me assume that you're not everybody is kind of returning. So just a quick primer as to what I'm seeing on the charts. And for that, let's go on the weekly time frame, super high time frame, right? Very, very clearly, I'm seeing that we're in a fourth wave correction. Let's put the log on, zoom out, and you can just make See, this is our previous ABC correction, and basically I think we're going to get the same thing. I don't think that's so far-fetched, is it now? A lot of people understand that, you know, in Elliott Wave theory, you get an ABC correction, a flat, zigzag, whatever. Everything always happens in an ABC pattern, right? So these are flats that you typically see on a larger time frame. And now you go up here, 1, 2, 3, 4, 5. You have your ending fifth wave diagonal. That's almost incontrovertible count. It's as basic and sort of a clear account as you're going to get in the real world, right? 1, 2, 3, 4, 5. Okay. You have your complex, you have your simple fourth correction and your complex 2 correction. So by the law of alternation, that works. Let's see. Yeah, that's pretty much it. Right after 5 waves, what do you get? A, B, C. Right. This is basically my take on Bitcoin, large time frame. So like my takeaway, if people want to ask, hey, what do you think is going to happen with the price of Bitcoin? I can literally explain it in one chart, in 2 seconds. No complexities, no Fibonacci's, no nothing. Just look. Everything, you know, Elliott Wave theory, very basic. And simplicity here is important because sometimes when things are too complex, they're unlikely, right? What is that? Occam's razor. It's usually the simplest explanations are most likely, right? Nature favors elegance and simplicity. Here's the simplicity of this, right? 1, 2, 3, 4, 5. 5 waves up. How do you know there are 5 waves? Here we can clearly see the 2 wave come here. Complex, like I said, simple by law of alternation. So that's in 2 and that's a 4. The 5 waves the 5 waves is very distinctive because it has its characteristic ending fifth wave diagonal. You only get that in wave 5, X waves and C waves. Okay, so in an impulse, because X waves and C waves are corrective, right? In an impulse, that's the only time you get this kind of ending kind of pattern, ending diagonal. So you know that's a wave 5. If that's a wave 5, what happens after every 5 wave impulse? You get an ABC correction. That's clearly A, that's clearly B, and now we're clearly going to do C, or we have yet to do C. Anybody who's looking at this and thinks it's complete knows literally nothing about Elliott Wave analysis, knows very little about charting, period. And it's unfortunate that 95% of people, 95% of YouTubers, 95% of crypto influencers seem to think that we're going up. And these are people that I respect. These are people that I follow. These are people that I've learned a ton from. I don't know why it is. And that's the psychology, I think, even when you know something. And I think I know why. Okay, I chart every day. I trade daily. Okay, so I don't just chart to, you know, give you guys patterns and make YouTube videos. I'm actually a trader that happens to do YouTube. That's not my main thing. Like, I don't spend too much time on these videos, as you can probably tell. Like, I just put them out. I share my ideas. It's kind of like a journal. It's kind of like my preparation for the day. And yeah, when I look at this, I see this every day, all the time on small time frames, and I can even show you, just like I showed you here. Like, you can see this on smaller time frames all the time. So when I look at this, it's pretty obvious. However, there are many things that I know and that are elementary to me, that are obvious to me, right? If they're presented in a certain context. But in other contexts, when I'm trading, if I'm not focused, if I have a certain bias, I'm blind to it, okay? That doesn't mean I don't know that. It's just after I do it, I'm like, oh, what am I doing? I look back and I'm like, dude, I know that this is that or that is this, yet I still did that. And this is what I think is happening. There's a bias. People want it to go up so bad that they can't even see what's right in front of them, right? And very clearly, this incomplete ABC correction. Very clearly, this stochastic RSI completely topped out. Hey, 1 second. Hey, I'm on a live stream, guys. You want to say hi?
Say hi.
Nicolas, you want to say hi? The notorious Nicolas, ladies and gentlemen. You guys hear him every weekend. Nicolas, say hi.
Lovely.
Huh? A Toy Story? Alright, I'm on the live stream. I'm sharing knowledge. I'm talking with my people, my community.
Good luck.
Alright, bye.
Bye.
That's the family. Alright. Anyway, as I was saying, you get distracted, right? And you have your ABC correction, and you just can't see. You're like, oh, it's so close to all-time high. We just gotta... No, right? That's not how it works. You look at this stochastic RSI, it's topped out. And most of those people that are telling you it's going to the moon right now, it's gonna go eventually to the moon. Trust me on that. Bitcoin will go to the moon. Just not now. But right now, they're blind to this. They're also blind to this diverging volume, right? Again, I did not break out the Vital Algo Indicator, which is a sponsor of this channel, by the way, a partner of this channel. I did not break out the whole moving indicator or whole moving average or any fancy indicator. You don't need all that kind of stuff to chart seriously, right? 90% of all my analyses are done with just basic price action, and then indicators to confirm, So you look at this, confirmation that that's a top is right here. It's on the weekly stochastic RSI. It's at a top. You have your top here, and then your top here. Basically, what's this top here mean? That means that basically you're going to go down, because if this is already at 97 or 98 overbought territory, you know that any move up is basically going to quickly be followed by a violent move down, right? This is bearish divergence on the weekly, not on the daily, but on the weekly. For those of you who don't know what divergence is, it's very simple. It's a fancy word for basically saying there's a discrepancy between price action here, right there. Price action's going up, but the stochastic RSI is going down. Do you see that? This is very clear. This is charting 101. This is not like some fancy anything. And actually, charting is very simple. Issue is consistency. So when you're trading, how do people lose money? It's not because they don't know what they're doing completely. It's just because they lack consistency, and it's actually a psychological battle. It's a game that you're playing with yourself, not being overrun by your emotions, not being overtaken by the want of making more money quickly, or revenge trading, all that stuff that blinds you to these very simple things that I'm showing you here. Okay, so the conclusion is we're going to most likely turn around and hit this C wave. Okay, that is as clear as day to me. Okay, I would put a lot of money on that, and I am putting a lot of money on that. How can you use this information to benefit yourself? One, not financial advice for the YouTube algorithm, but yes, financial advice between you and I. Sell your bags. Sell your bags. I understand that altcoins are mooning. I understand that. But sell your bags at a certain point in the near future, right? Get your gains. I'm glad things are mooning, and that's to be expected. Why? We all know market cycles happen how? Bitcoin moons, and then once Bitcoin hits a top and starts coming down, Ethereum hits all-time high, then starts to come down. Then large cap alts, top 30, top 40 projects, moon, hit all-time high. Then low cap alts, then micro caps, right? In that order, more or less. It's not perfect, but more or less liquidity flows down from the largest to the smallest assets. Largest market caps to the smallest market caps. This is exactly what we're seeing, people. This is exactly what we're seeing. And as a result, if you were to sell now and buy back there, that's generational wealth. That's life-changing money that you're potentially making for yourself if you play it right, right? If you're selling a big bag up here and buying back down here, you just made yourself many big bags out of one big bag. That's the point of crypto. That's how you play this, right? And another last thing I'm going to say about this analysis. I know a lot of you are probably thinking, well, Dean, nobody else is saying this. Well, I ask, how many other people do people typically all go together and get together and call tops or bottoms? Or does it catch most people unawares? That's the question you have to answer for yourself. Nobody's going to tell you. If you're waiting until somebody like BitBoy or somebody that has 1 million followers or somebody or a lot of people tell you, this is the time you sell, this is it, then you're already too late. Your exit liquidity, okay? To be able to sell the top, by definition, you have to go counter trend. You have to kind of be avant-garde. You have to be not first, but early, okay? And most people are not going to be early, and that's how this works. That's why we make so much money in crypto, because people buy tops and they sell bottoms. That's the ugly truth. However, even those people that buy tops and sell bottoms, if they hold long enough, they'll make some money as well. Okay? So that's for those of you who don't know, who aren't subscribed, who haven't heard that. That's my take in a nutshell. All right. Now, let's get into the nitty-gritty, these details. What do we foresee happening now? All right. Now let's go get off the log. Okay. So we had, and I said this in today's update, this is all-time high, just so you have a little bit of reference, spatial reference. From all-time high until now has been a death zone. 11 days of very, very choppy action, okay? Most people, myself included, had trouble making heads or tails of what the hell was going on, okay? This, from a trading standpoint, is, for a lot of people, should be a no-trade zone, okay? And it creates a lot of confusion, all right? And the reason being is that corrections are, by definitions, confusing and messy, right? They happen in ABC patterns, we know, but all the different types of corrections put together one after the other, right, create an endless combination and endless permutations of different types of patterns that you can see that confuse the living hell out of people. And so if you're to ask in mid-correction for somebody's opinion on whether the price is going up or down in the immediate or long term or short term, they can't tell you. You know what's easy is when the price is trending. The thing that makes trading challenging is that price seldom trends. It's seldom going in an impulsive wave. For instance, do you see this impulsive wave? Let's go into a smaller time frame. I can show you. This is where people get excited. This is where people really lose their minds. These candles, these large green candles or large red candles, right? But here, 1, 2, 3, 4, 5. This is beautiful, right? That happened all in the span of 2 hours and 20 minutes. A glorious 2 hours and 20 minutes. It literally took 10 days of price action, okay, to produce 2 hours and 20 minutes, right? 240 hours of price action to produce 2 hours of what everybody was waiting for, right? So if you're a trader and you consider this a no trade zone, you're waiting for 240 hours just for 2 hours of action. That's the challenge. This is why trading is difficult. It takes patience to realize that you're probably going to get smoked because you don't have a map here, right? You can't really tell what's going on. And so, the price is going up and down on you. High volatility. You're getting wicked out left and right. But then this happens. And you'd have to actually be quite perceptive to even know that this was coming in this way and at this time, right? If it came while you were sleeping, guess what? 240 hours spent waiting in front of your computer patiently for that next uptrend, for that next impulse, wasted. Do you see? That's why trading's difficult. But this is also the opportunity, ladies and gentlemen. If you're serious about learning how to chart, if you're serious about learning how to trade, you got the impulses, right? But now master your corrections, okay? Master your ABC corrections, your flat, your zigzags, your irregular flats, your expanded flats, same thing. Your running flats, more rare. Master your WXYs, your WXYXZs. Master that. Then you're golden, right? If you're really serious about it, right? And honestly, obviously, maybe I'm biased, but I don't see, there are other, tons of great ways to chart. But without some knowledge of Elliott Wave theory, you're pretty much in the dark. It's one of the only tools that we have at our disposal that allows us to gain context, okay? Because you can trade patterns all day, but patterns are their execution rate are sometimes 55%. What does that oh, it's a fake out. Like, how do you know a fake out from a real one? Oh, it's you're looking for volume, and it's tough. Without Elliott Wave, it's very, very difficult. It's like the lights are off, okay? So learn a little bit of Elliott Wave to get a little bit of context for all of those patterns. It'll help you immensely. And it's one of the reasons why Wall Street uses patterns, right? Or sorry, Wall Street uses Elliott Wave, right? In addition to everything else. All right. So we got all this chop. Now, what sense do we make of this? 2 or 3 days ago, a light finally went off for me because I was under the impression that this was 5 waves down. A lot of you who are subscribed already know this, but then I saw the lights that this was indeed an ABC. After 5 waves up, we got A. Now we're getting B, right? And we're going to get C. That takes us into the C wave. So you zoom out and you see that it's basically, 5 waves up on this B wave, which also gives us an ABC, right? It's fractal. That also breaks people's brains. Like, another ABC, Dean, but we're in an ABC. Yes. It happens on time frames and at scales that you ignore because they're so small, you don't even look at them, right? But you have a larger ABC, right, that takes months to execute. You also have smaller ABCs. And remember, why do you have an ABC is because this B wave that we just hit, well, not just hit, but that we've been in since about July, this B wave that we've been in since July ends in a C wave that is a 1, 2, 3, 4, 5 impulse, right? The impulse happened here, right? Remember Wyckoff accumulation, and ever since September, October 1st, right? We have 1, 2, 3, 4, 5 waves up. After 5 waves up, you get your A, B, C pattern, okay? You have your ABC correction, and this is why, some people are saying, oh, it looks like 55 is a good target down to the downside, or some other people are saying 52, right? If we get the extension of C to the 1, 2, 3, 6, okay? So that's pretty much what I saw the light on, but that wasn't immediate, right? It took some time, and I got lost in price action. I was getting stopped out in trades because I was thinking, one thing was happening and it was another entirely, okay? So that's the A, that's the B, that's clearly a B. You see that, right? Boom, boom, boom. It's going to take you up here. Look at this. And this is the beauty of fractals. You see it everywhere. Look at this A, look at this B. Look how it looks, okay? And now let's zoom out. Let's go on the 12-hourly time frame. Look at this A. Now look at this B. Boom, boom, boom. Do you see any similarities? It's so beautiful. The mathematics, the fractalization, the geometry. You have these answers in front of you. It's like you're looking into the future. Do you see what I mean? You're looking into the future because you see it already. And it's happening right in front of your eyes. And it's going to give you the same thing. Do you see? So this is what we're expecting. This is what we're anticipating, and this is why we're anticipating it. Yeah. So that's pretty much it. Oh. So, question: will we make an all-time high, or will we go back down? It's actually not the question. Why? I put that not as clickbait, but because I can't write an essay on the thumbnail. But in truth, we can go as high as 72K and still be in a B wave. Let me show you. All right, let's go down on... No, let's stay on the 12-hour. Okay, let's stay on the 12-hour. This is your A wave, right? This is your B wave that's forming, right? Okay. Let's take our fibs. Let's take our A wave from top to bottom. Okay, what do we know about A waves and projected B waves versus... So, let me speak English. What do we know about the target for B waves given an A wave? First and foremost, there's two types of B waves. You can get a B wave in a zigzag or a B wave in a flat correction, okay? A B wave in a zigzag correction only goes to the 0.5 or between the 0.5 and 618, okay? Why do we know that Bitcoin is definitely going up, right, as sure as we can? Is because we've already exceeded the 0.5 and the 618 of this A wave, okay? If we were hovering here, then I'd say, oh, maybe it's a zigzag. It can no longer be a zigzag because it's already exceeded the 0.5 and the 618, okay? That golden pocket, which means it has to be a flat. And what do we know about B waves in flat corrections? B wave and flat corrections go from the 0.786 fib all the way up to the 1.618 fib, okay? So, what does that mean? Your B wave in a flat can go from here let's get the ruler out. From here all the way up to here. Do you see? That is a valid B wave. And do you see this? On this chart, it's actually 73,562. That is the top. That can be a top of a B wave. If it gets in this region right here, between the 1236 and the 1618, it is officially an expanded or a regular flat, okay? Most of the time, you're going to get your B waves coming here between the 1 and the 1236 or the 786 and the 1, okay? Anyway, right there is, from 786 to the 1236 is where most B waves fall for flat corrections, okay? So that's where I anticipate Bitcoin to go. Obviously, if it breaks this one, we get a new all-time high, right? But so that's why this question of all-time high or will we turn back around is not really the question you should be asking, because technically you can get both. But it's likely that we not get an all-time high and that we end up, like I said, between the 786 and the 1, okay? So, actually, the 786 and the 1236, you can easily get an all-time high. It's not actually that difficult. unless there's staunch resistance at the all-time high, which there might be. Okay, so yeah, that's basically what I'm seeing in Bitcoin right now. And then let's go even shorter time frame. Let's go to a very short time frame. We're in the 5-minute chart. Let's see some definition. Okay, we've got... All right. Okay, so we had a 5-wave. All right, let's zoom out so you guys can see what I know, or see what I see. All right, you got 1, 2, 3, 4, 5. We already talked about, or sorry, 1, 2, 3, 4, 5. This is 5. Okay, we already talked about this. This was that impulse that we got this morning, early this morning. Okay, then we got A, B. B came up quite high. B came up not beyond. So if we take the A wave top to bottom, we see that B came up into the 1236 to the 1618 region, which is technically an expanded flat. Okay, so we got an expanded flat with B here. Okay, and so the target for C on an expanded flat is going to be the inverse 1618 of the B wave. So expect C to come down to 62,354 on this chart. Okay, so expect further downside. Let's see, just checking the chat really quickly. No chats. All right, so that's basically what I'm seeing with Bitcoin here. Actually, let me put in a trade real quick. Let me short this. Let me do this on my phone. Talk amongst yourselves. This should take just a second. Live trading, ladies and gentlemen. All right, let's see. Okay, so this should be nuking down. Okay, and so you're getting one. Actually, let's get in on this. Let's get in on this action. Okay, so, and this is, I guess, a good opportunity to talk you through how I trade. Okay, so first and foremost, I don't care about the leverage. I can use as high leverage as I want. What's important to me is the stop, where the stop is going to be. So right now, on this chart, this is the chart that I use for my exchange. Okay, and my strategy is I use a little bit of capital but high leverage. Okay, and I try to time these things precisely. So my stops I want at 63,229 pretty much. Behind all of this muck, I do not see. Actually, look, we're about to get a bullish cross. I'd say my stop's gonna be up here. Okay, let's see. Yeah, up here. Up here's fine. 63,326. Okay, so whatever leverage would allow me to have that would be fine by me. I'll go as high as that requires or that allows. Okay, so basically I look at my liquidation point and I get my liquidation point close to that leverage. I hope that makes sense. If it doesn't, I can do another video on that. So let's see. So yeah, that's that. And then my take profit would be, like I said, the inverse So I always do this. I do first and foremost my stop. That's the most important thing. Okay, and then my inverse, my take profit. And I always take profit a little early because I don't want to get run on. Okay, and I've had that experience before. So that's my A. This is my B. So I take my inverse 1618. I use my magnet to be really, really precise, and this is the exchange that I'm trading on. If you want, if you're new to this exchange, if you haven't signed up, you can use my code. It's in the description below. Anyway, the inverse 1618 of this B would be at 62,338. So I'm just gonna round up and do 62,340 or something like that. Okay. So that should be my setup. That's where I put my stops. That's where I put my sort of take profit. And now, since I'm shorting, I want to get the price as high as possible. So I wait a little bit, and that's fine by me here. And boom. Orders in. Just waiting for it to be filled. And yeah, that's it. So just wait for this to be filled, and once it is, then you should see the stop line over here for the stop loss. And I think I'm okay because I count A, B, or sorry, that's B. This 1, 2, I think this is the third wave. Yeah, there you go. See, that was just filled. You see my stops are up here. This is my prop. If it's green, that means profit. If it's red, it means loss. And then this is my take profit point right here, right above my 618. You see that it just went into the negative because it's running up. Okay, but again, my stops are here, and I can move my stops just up and down like this. But my stops are really tight because, right, they're pretty much behind all of these EMAs, so I'm not expecting the price to go and break these EMAs. So yeah, that's a little trading. I trade small amounts of capital, and I think that's, for me, I don't make most of my money trading. I make most of my money just buying and holding, and trading is just kind of supplementing my bags, if you will. All right, so that's pretty much it for me. This is what I'm seeing in the charts, and yeah, I expect the price to go down here to the 1618, around there, and then turn around and finally have another impulse up to the 66K region, right? And how do we know that? If we go back, let's see. All right, so take this off. Oops. Well, yeah, I don't need that. And I don't need that. Okay. So here's a little pattern analysis. Actually, we don't need to be in the 12-hour, 45-minute time frame is okay. Okay, so the target for this inverse head and shoulders is very clear, right? Boom. It's neckline, which is about here, down to the bottom of the head, superimposed, and that's where you get your 66, 67, right? The neckline's actually a little further down here. And let's draw that out. let's turn off the magnet. Right there. Okay, that's about the neckline. So yeah, this is where I get my 66K target. So really just shy of all-time high, and that would put us about at the 826 fib, yeah? So that's how you use pattern analysis. You can also use Elliott Wave to get the 66K target. How? If we go and correct down to the inverse 1618, about to here, the neckline, yeah? And you project from that point. Let's see. How would you do this? I don't know if that makes much sense. Yeah, I think that's the simplest way. Just use pattern analysis to get that target. Yep. So that's it from me. Hope this was helpful. Hope this was useful. Little shy of an hour, but yeah, hopefully you got value from this. If you did, like the stream, subscribe, share the video, and hope you all found value in this and you learned something. Please leave comments. I'd love to hear what you guys think. And yeah, I'll see you guys tomorrow in tomorrow's daily update. All right, bye.